You've done everything right. You've watched every personal finance video. You've worked hard. You've been investing. Maybe you even own property. But there's one thing that could erase all of that overnight. And most people never think about it until it's too late. Not even trying to be morbid, but what happens to everything you've built if you're not here tomorrow? That's the question that most wealth building conversations completely skip over. And that's exactly why today we're talking about life insurance, the most overlooked piece of a solid financial plan. Before you invest another dollar, you need to understand this. Hi, I'm Kamsi, and I hate wasting time, so let's get right into it. So there's two types of life insurance: term life and permanent life insurance. Term life insurance gives you coverage for a set amount of time, and permanent life insurance gives you coverage for your whole life. But we won't go into permanent life insurance today. Let's save that for another video. So for a traditional term life insurance policy, the owner of the policy pays a fixed price for a certain amount of time so that the beneficiary of the policy can receive a specific amount of money tax-free if the insured passes away. That may have not made sense to you, so let's break it down. Let's say Emmanuel bought a $500,000 term 40 life insurance policy for himself today, and it was approved and made effective today. What that essentially means is that if Emmanuel passes away any moment within 40 years from now, his beneficiary will receive $500,000 tax-free. And that $500,000 is called the death benefit or the face value of the policy. But before he buys the policy, he has to fill out an application. And in that application, he has to name a beneficiary for the policy. And the beneficiary is the person that receives the money if he were to pass away within the 40 years. But Emmanuel could also choose to make the beneficiary an entity, such as his business or another business, or he can make the beneficiary a trust or an estate. So you can essentially name anyone as your beneficiary. And if you are a male, this policy will cost you around 40 to 160 Canadian dollars per month. And if you're female, it will cost you around 35 to 110 Canadian dollars per month. And that monthly price is called the premium. And the premiums are usually paid on a monthly or annual basis. So Emmanuel would pay this premium for 40 years because it's a 40-year policy. And if Emmanuel doesn't pass away during the 40 years, the coverage ends and the beneficiary doesn't get a payout, which is honestly the outcome we're all hoping for. But he may have the option to renew the policy. Now, I know what you may be thinking. Kamsi, this doesn't sound very exciting. And you're right. Nobody's posting their term life insurance policy on Instagram, and this isn't really a viral topic. But that's exactly the problem, because for those who are actually looking to build wealth, term life insurance can protect what you're building. So let's break down who needs it and why. Number one is young adults. If you're in your 20s or early 30s, healthy with no major dependents, this is one of the best times to get life insurance. You are most insurable right now because you are young, you are healthy, and you have a low probability of passing away anytime soon. Life insurance premiums are lowest when you are young and healthy, so getting life insurance now protects your insurability, so even if your health changes later, you are already covered. And to be honest, life moves fast. Because today you could be young, healthy, and single, but in a couple years you could be married, have a kid, and a mortgage. So getting it now means you're not scrambling in the future when life has already gotten busy. Think about it as protecting your future self and the wealth of your future family. But some may argue that there's no point in getting life insurance if you don't have any dependents, which is a fair point. But the issue is that we don't know what will happen tomorrow. Today, you may be healthy, but tomorrow your health could change. And if it does, it would affect your ability to get life insurance. And it will also increase the price of your life insurance too. Because the older you are, the more expensive life insurance is. And the more health issues you have, the harder it is to get life insurance. And it will also be more expensive because you are at higher risk. So it's really up to you. Would you rather lock in the low premiums at a young age when you're healthy, or wait till you have dependents and take on the higher premiums and the risk that your health could change in the future? But for young adults, what may be suitable for you is buying a term 40 life insurance policy that covers you for 40 years and also investing consistently during those 40 years. So if you're 25 years old, for example, if you buy a term 40 life insurance policy, that will cover you until age 65. And if you invest consistently from age 25 to 65, by the time you reach age 65, you should have a substantial amount of money that would help protect the wealth of your family if something were to happen to you. So at that age, you wouldn't really need more life insurance, or you may not need as much life insurance because you've been saving and you've built up some money to protect your family in the case something were to happen to you. So that's something you should take into account. Number 2 is families. Now, for those of you who already have a family, life insurance is a non-negotiable. Your family needs your income to maintain their lifestyle. If something happens to you, that income disappears. So term life insurance fills that financial gap because you can structure it to cover your family until your children become financially independent or until your partner reaches retirement age, so that if you're gone, your family can still have the means to take care of their expenses. Number 3 is home owners. So if you have a mortgage or you're planning to get one, pay close attention here. Your mortgage is probably one of your biggest financial commitments of your life. Term life insurance can be structured to cover that commitment. So if you have a 25-year mortgage, you can get a 25-year term life insurance policy so that if your family loses you, they can still pay the mortgage. But one thing you must know is that term life insurance is not the same as mortgage insurance from your bank. With term life insurance, you own the policy, you choose the beneficiary, and that beneficiary can use the death benefit however they need. They could use it to pay off the mortgage, they could use it to cover living expenses, they could even invest it. They decide. But with bank mortgage insurance, the bank is the beneficiary and the payout goes directly to them. We won't go too deep into this today, but just know they are not the same thing, and term life insurance gives you significantly more control. So number 4 is business owners. When you're a business owner or a shareholder in a company, your death is not just a personal tragedy, it's a financial event for the business. Think about it. If you and your business partner built a business together and they suddenly pass away, what happens? Who buys the shares? What happens to the business loan that was guaranteed by their personal assets? Can the business even keep running? Term life insurance solves these problems affordably. It can fund a shareholder agreement so that if one partner dies, the surviving partner can afford to buy the deceased partner's shares from their estate. This allows the business to simply continue to run. It can also protect working capital so that the business doesn't collapse because a key person suddenly passes away. And it can help guarantee a commercial loan so that the bank isn't coming after the business or the family. And because the term life insurance premiums are paid by the company, there are real tax advantages involved as well. So for any business owner or business owner to be watching this, a conversation about life insurance needs to happen sooner rather than later, especially if you have a partner or a key person the business genuinely relies on. So I know term life insurance isn't the most exciting financial product. It won't make you rich, but it will protect what you're building. And honestly, it's more affordable than most people even realize. So if you're watching this and you don't have life insurance, or maybe you're not sure what you have or whether it's enough, let's talk. I help clients all across Canada with financial planning. Feel free to book a conversation with me by going to this link or clicking the link in the description. And if this video helped, make sure to like, subscribe, and share it with someone who needs to hear it. Thank you for watching. I'll see you in the next one. God bless.